chapter 15, half from chapter 16. And as far as how many involved calculations, 1, 2, 3, 4 out of the 20 involve calculations. The other 16 are just questions about the chapters, theoretical questions. Again, theoretical question about leases and how we classify leases, classify them. Now, how does the lessor, what does the lessor have? What does the lessee have in terms of options? Remember, to the lessee, it's operating or capital, right? To the lessor, it's operating or direct financing and sales type lease. And then there are the 4 criteria. You should know the 4 criteria, and of course you don't have to memorize them because it's open book. So you just need to know what the 4 criteria are and how to use them. And one of the problems that I asked you in the multiple choice, you'll just need to tell me how I'm going to meet one of the criteria. The present value of the minimum lease payments must be at least a certain number. What is that number? What was that? Again, 4 criteria, so we can look that up. 90? 75? What was that? 75? 75%. What about the economic life? That's 75. The present value is 90%.
90% of fair value.
Oh. All right, the present value. Now, what if, let's see. Oh, again, different situations. Is this an operating lease or is this a capital lease? And how does the lessee measure it? How does the lessor measure it? How do they record it? What about useful life of the asset? What do we look at, the lease or the actual useful life of the asset? What determines what we look at? You should know what table we need to look at to determine the present value of the minimum lease payments. And remember, most of these are what? Annuity due. And you should know how the sales type lease differs from the direct financing lease. As far as taxes, we talked about deferred tax assets, deferred tax liabilities. You should know what those are. What is it that creates one? So you'll be giving some scenarios here. You'll tell me, which one of these is a deferred tax liability, which one is a deferred tax asset. There's a problem in the multiple choice. You'll be given information and you're to tell me what exactly it is that's going to be reported as a deferred tax liability on the balance sheet based on the fact that this is what we report for tax purposes, this is what we would report for book purposes. What will it be on this date?
On the balance sheet?
Well, deferred tax liabilities are on the balance sheet. So are deferred tax assets. Right? Mm-hmm. So what would we report on the balance sheet as a deferred tax liability? Or a deferred tax asset? This one's a deferred tax liability. And again, a question as to what creates a deferred tax asset? And what does a deferred tax asset represent? A question about the valuation account. 2 questions about valuation. Well, let's make that 3. Except this one involves numbers. And we talked about temporary differences and permanent differences. Okay? So what do we do if it's a permanent difference? And then a couple questions on net operating losses. What does the current tax law say about carrying back and carrying forward? That you should have memorized, right? 2 and 20? And, see, I expect you to get this one right. And that's it for the 20 multiple choice. So the first problem regarding leases is you'll have all the information you need, like the lease term, the annual lease payments, the life of the asset, the fair value, the implicit interest rate, the incremental rate, and they're both the same, so you don't have to worry about which one do I use. And no expected residual value. So record the journal entries for the lessor. The next problem on the leases is information and regarding a lease, and you are recording the lease payments for the lessee. And then you tell me what amounts are being reported on the balance sheet and what amounts are being reported on the income statement. And we did one like that. The 2 tax questions, you're told everything, all the particulars you need about book income, tax rates. You're to prepare the appropriate journal entry for the income taxes for the year 2011. And then you're to tell me what this company's net income is for 2011. So in other words, you don't have that info, you get it from the info presented. And the last problem is the net operating loss. You're told what the tax rates are for the previous years and the taxable income and the NOL. And so you might be carrying it back and then carrying it forward as well. So what are the journal entries? And that's it.